Good day everyone, my name is Ng Ming Hong, Normometrics 261266, and today I will going to present a persuasive speech which the topic will be the benefit to invest in stock market instead of putting saving in fixed deposit. So the purpose for me to present about this speech is to persuade my audience to invest in stock market instead of putting in saving in fixed deposit. So first and foremost, as a child, I actually thought for the longest time that the money plant in my garden was going to grow cash for me in the future. So although the adults have rightfully broken at the argument, who does not want to see the growth of their money? So if you invest appropriately, make accurate decisions, and beware of the associated risk, the stock market can be the correct embodiment of the money plants. So the concept behind how the invest in the stock market function is pretty easy. The stock market, working much like an auction house, help the buyers and the seller to bargain the prices and make trades. I have come across numerous Malaysian people who are clueless about how to start investing and the benefit of investing in the stock market in Malaysia. So they choose to save their money in fixed deposit. According to the Stash Away Malaysia country manager Wong Kai Wen, he has mentioned that only less than 5% of the young retail investor under age of 35 are investing in Bursa Malaysia. So actually, it is not hard to enter the financial world. A foundation of the financial trading industry required a basic investment awareness such as the buy low, sell high. And if you probably wondering how to trade stock in Malaysia and you are new to the trading, trust me, it's not too hard to understand the process itself. All you need is just trading account with a stockbroker. Before beginning your journey to invest in the stock, let me explain to you why we should invest in the stock market instead of saving in fixed deposit. So, we will invest in the stock market is because we can gain higher dividend income, capital gains from stock market, and is one of the best way to stay ahead from the inflation. Firstly, we can gain a higher dividends income from buying stock. Based on the article written by the James Chan, an equity dividend is paid to shareholder made in share rather than in cash. The stock dividend has the benefits of rewarding the shareholders without decreasing the cash balance of the company, although it can be dilute earnings per share. So the article from the Star written by the Oi Kok Wah, he is the managing partner of MRR Consulting, dealing mainly with the business appraisal, investment, and financing training. He has said that there are many stock offering dividends used in excess of the existing FD, average about 2 to 2.5% relatively to the current higher stock price in Bursa Malaysia. So the average dividend yield of all stocks in Bursa Malaysia is around 3.5%, which is 2.5% higher than the existing 12-month fixed deposit rate. So let me give an example of the research by Oi Kok Wah. He found that in the year 2019, the dividend yield for the hectares is 10.01%, and the latest dividend yield for this year was 13.75%. The fluctuation of the dividends yield for between 2009 to 2020 is around 9% to 14%. So it is considerable stable for the most of the investor to get the dividends. Most of the people without the knowledge of investing will choose to put their saving into the fixed deposit, and this includes me myself. Before I starting to learn and make research about how to invest, I only think that the way to increase my saving is to putting my saving into the fixed deposit and get the dividend from it. Based on my personal experience, after I had learned and made research on how to invest in the stock, I realized that the dividend by fixed deposit is actually lower than investing in the stock. Besides that, the dividend rates for the fixed deposit will affected by the period of the saving. The short the time you save and put in your money into the fixed deposit, the lower the dividend you will get. On the other hand, if we invest in the stock market, the rate of the dividend is higher compared to the fixed deposit, and it will not be affected by the period of holding the stock. Even that if you buy the stock for a week or even a day before the stock insurance interest, you will still get the dividend by the rate instead by the company. Second, we should buy the stock is we can the reason for we to buy the stock is we can get the capital gains from the buying stock. Capital gain is an increase in the price of a capital asset when you sell the asset as it is considered to be realized. A capital gain could be short terms like 1 year or less, or a long term which is more than 1 year. While the capital gains are generally synonymous, while stock and funds due to their inherent price fluctuation. Any security sold at a price greater than the selling price paid for many have a capital gain. For Malaysia, we do not have any taxes on the profit from capital gains. This makes us that can earn more from that. When buying stock, we usually hope that the company values will be increased, generating a capital gain when the share are eventually sold at a higher price or to someone else. A speculative practice known as a short-term trading is to trying to get such low, sell high, profit over a short time period. The company is expected to expand over time are known as stock of growth. You might wondering how much we can earn from the capital gains. Here, I will explain the stock price by using a graph of Nestle Malaysia Berhad. Nestle Malaysia Berhad is a Malaysia-based nutrition, health and wellness company. The share price of the Nestle at year 2010 was around 33 ringgit, and the price for 2020 is 141% per share, and this share rose about 400% over the past 10 years. For long-term investment example, if you invest 10,000 in Nestle Malaysia and then in year 2010, and you will gain a 40,000 in year 2020 by holding the Nestle stock for 10 years. After you have seen the example that I've shown, do you still willing to put your money into the saving account in fixed deposit? No, right? In my personal experience, capital gains are categorized as a short-term gains or long-term gains. When your investment has been kept for less than 1 year, short-term gains occur. For a more safety and low risk, I will suggest for the long-term investment and choose for the blue chip stocks that you have trusted. One of the reasons why wealthy investors enjoy blue chip stocks so much is because the blue chip stocks are stability and the strength of the financial statement, and they tend to increase decades after the decades at a reasonable return rate, usually between 8 to 12% historically with reinvested dividends. Many a little make a miracle. The reason why we should make investment in stock is because it will bring you a compounding returns. The amount of money in time increase over a period of time. At the moment of retirement, the daily investment made from an early age will receive significant benefits. Lastly, the reason we should buy stock is that the earliest way to keep ahead of the inflation to buying stock. Historically, the stock have averaged an annualized return of 10%. This is higher than the average annualized inflation rate. By transferring fixed deposit to the stocks, they offer a major shield against the future inflation. The stock provide inflation protection in two major forms. The first is the stocks will always pay dividends, and the second is the stock can be rise continuously over the time. As a company that grow their profits, the dividends can also increase significantly. They will pay more in the form of dividends if the company earns more. In the future, these increasing dividends will lead to greater cash flow, which might theoretically boost your purchasing power and sustain for or even improve your standard of living even as the inflation is rising. Capital growth is the second inflation fighting part that the stock have. In general, the stock price continuously rise up over time. A few $100,000 will be saved in the stock market, which is rise to $500,000 over a course of 20 years. That's more money than you have to keep your standard of life equal to what you are living in now, even though the inflation was rising in the future. So, in my humble opinion, although we cannot control the inflation that happened in our country, but we can still avoid it by planning. Plan to invest in stock that will pay dividends and grow constantly is the way better than putting your saving in the fixed deposits. As long as these companies can raise price with inflation and maintain their profit, their stock price should be rise alongside with the inflation. So, to conclude that what I have said in the speech, let me briefly restart why we should invest in the stock market instead of putting saving in fixed deposit. The reason why we should invest in stock is we can gain higher dividend income, gain capital gain from the stock market, and is one of the best way to stay ahead of inflation. Frankly, investing in the stock market is about learning, having fun, and making cash. But do you know that there is more than just making money? Done right, trading in stock can help you with the limited work to use resources that you already have to make more money. After having a long speech, I hope that this speech can give you the idea that why we should invest in the stock market. Thank you very much. My name is Ng Ming Hong, Normal Matrix 261266.